sorting. I'll just open the Excel sheet for a backup. Okay, so are you ready, guys?
Yes.
Okay, so I don't like one-way communication, okay? So I need your participation as well to discuss a number of things. And we're gonna start from very basic things as well. The reason is there are a few audience, they are new to this industry or investment banking space or fund business. That's what. Okay, so if I ask this question, so to you guys, what is fund or what do you understand about fund? Only fund. I'm not talking about accounting. I'm just talking about fund.
Fund is like a financial instrument, just we can say that.
Fund, it means it's not a financial instrument.
It's a pooling of money.
Pooling of money, yeah, that can be the one feature which you would see.
It's a pooling of money collected from investors.
Collected from investors. Okay, let's say we'll create a pool. Pool, it means it's your fund bank account. Okay, collected from different investors. Can we say that? Yes, no, maybe.
Yes.
Respond it. You're gonna enjoy this session. Basic things which will help you to link all this basic expertise with the fund accounting process or business. Then definitely you're gonna enjoy this. And if you don't participate in the discussion, then it will be like one-way communication, and then wrap up this session within 1 hours with the limited things only. If you want me to be explore on a different areas in depth, then I need your cooperation. Okay. Pool.
Okay.
Pool, it means it's a bank account. And in this pool, the different investors, A, B, C, D, E, F, Z, there are a number of. What they do? They send the fund to the pool, right? And once fund received to the bank account, what happened? After that, what happened exactly? So can we say that this pool, it means it's a capital raising process?
Yes.
You don't need to write anything. If you want to write, you can, but this is a recorded session, right? After the session, when you get a chance or opportunity in between, we again go through it and prepare your notes. And all the important content already I have uploaded in the course itself, and the remaining documents which will be there very soon, you can enjoy it. So you don't need to write anything, just try to understand this. And if you're working with fund accounting business, you can relate all this content session or concepts with the practical work. Okay. Pool, it means to raising capital process, right? In a normal business also, guys, we do the same thing, right? We raise the capital through bonds, we raise the capital through commitment or term sheet, we raise the capital through bonds, loans, correct? Yes, no, maybe.
Yes.
Yes.
Then what is the different, or what are the different things which you are seeing with the fund business then? Any idea? We raise the capital in normal business also. Private limited company, public limited company, venture, that is startups, GMT is looking for a fund now. We have registered the business as a private limited. Very soon we're going to receive incorporation certificates. Then we'll announce that we are also looking for a fund. And what is the difference between this pool? So we can say fund and the normal business. In academics, we have learned about normal accounting. It can be private limited company accounting, public limited company accounting, partnership funds, partnership companies, right? L1 to 12 standard chapter. Hope you remember. Prepare the partnership accounting. Final accounting chapter. So we have done this.
Yeah.
Just try to
So,
relate it. Yeah, go ahead.
yeah, so over here in the pool account, we are getting a funds from different investors, but actually that account is managed by someone else, whereas in the other one, the person who brings their own capital and manage their own business and transactions.
Yeah, we'll see that. Slowly and steadily. But yeah, right? So it means it is a pool. Pool, it means it's a bank account.
Yeah, it's
The
a
investors or people like us, they are sending money or
yeah.
cash to whom? To the pool account. Or maybe I'll draw this. Fund manager is here.
It is is it just similar to the feeder account?
Which account?
Feeder account.
We'll discuss that. That is one of the structure of a fund. Okay.
Oh, okay.
You can
Got it.
relate that, but not exactly. So that works in a little different way. It's a structure. It's a pool. Pool, it means it's a bank account.
Okay.
Let's say Samir is looking to manage the fund. And that's what he reached to us, to all audience, that he wanted funds to invest in a different financial instrument, so which the Samir can generate the alpha. Alpha means return for an investor. See, there are ways, guys. When we say to raise capital, nobody can transfer the capital to you easily, right? Go and check in market or reach out to me. Hey, can you please transfer 1 crore? I'll ask several questions. I'll ask you to sign the documentation with me and form the partnership business if it is necessary or required. And then after, I'll transfer my commitment to you. Commitment means capital. Correct? If I ask you, hey, can you please invest 1 lakh rupees in my business? Your next question would be like, how we can invest it? Then my answer would be like, through agreement. Then your question would be, what about the valuation? What about the price? How much is the valuation of your business? There would be a number of questions, and then after you can initiate this investment agreement or different things and invest. But eventually again the fund will receive to the pool account. Why pool account? Why not? If the Samir is announcing the scheme or asking you to pay the money, so why can't you transfer your money to the Samir account? Any idea? Any guess? This is a very important from fund accounting point of view or any business point of view. In a banking or in any business, when you form your business, you cannot ask anyone to pay or transfer the fund to your account. Why?
Business is different from the person.
Exactly. So accounting, basic accounting concept, business entity concept. Samir has a separate existence from, let's say, ABC LLP. Because Samir is just sponsoring or promoting to this business as a promoter, maybe as a general partner, maybe as a fund manager. general partner and fund manager can be different, okay? Can be, it's a possibility. There is no fix, like in every case there would be different general partners and different fund manager. If it is a small fund, let's say in your case, if you raise 100 crore and if you're able to manage it, then you can be perform the role like general partner as well as fund manager. So it means now Samir is raising capital through or for ABC LLP. But point here is, how can you raise it? To raise the capital, you will have three options. One, you can, like IPO, what we do here, to list securities, correct?
Yep.
Am I right, guys? Yes, no, maybe.
Yes.
Yes.
If I don't want to list the securities, then in the OTC market or secondary market,
Private funding.
here private funding. But maybe, let's say again, if I'm not able to list, then through preference equity or maybe bonds or debentures, I can raise it. And still, if I'm not able to qualify that particular areas for a different financial instrument, then I can go ahead with commitment. Commitment agreement. So let me send a link to my one of the client. I forgot it actually. Sorry. Right, so I can sign commitment, or I can call term sheet, security purchase agreement, deed, partnership deed, we can call it, and I can raise the capital through or from private people. So I can raise capital through private people. And how can I raise it? Through agreement, or maybe through deed, term sheet. And as a fund accountant, if you observe one thing, if you're working with fund accounting, if you don't know the agreement or terms on the agreement, how will you record it? You don't know the preference return, management fees, or maybe incentive fees percentage, let's say crystallization point, catch up, high watermark. How will you apply the accounting treatment to the particular financial transaction then?
Yeah, they prepare one document kind of PPM.
Exactly.
So they circulate that one. Based on that one, the total terms
Your
and conditions
system,
available in that.
you think
yeah.
like you're working like, as per the fund requirement. No, we all are working as per the directive issued by the regulator. Go and check the ISMA regulation, go and check the SEBI regulation, go and check the federal government regulation. Why we record the trades in the system, and in which form or theme we can record it, that all directive given to all the institutions for working in investment business. Let's say if I raise the fund, why I can't or take or accept the funds in my personal account as a fund manager? Because the directive, alternative investment fund directive, alternative fund management act, which cannot allow you to accept the fund in your bank account. And that's the reason, after forming this structure, you need to raise the fund, but that fund needs to be deposited or received in a bank account. And it's a mandate to have bank account as well. Right? Are you with me, guys? Still here? Any doubt, any question? This is a ground level work. If you are
Good.
if you are skeptic, like, are we gonna cover the accounting entries or not? Yes, we're gonna cover everything. Don't worry. This is just a beginning. There will be ample amount of things in your plate to test or to add, and if you can digest everything, then you can work in hedge fund or private equity or mutual fund as well. That's absolutely fine. Okay, I'll take you ahead. So it means now in initial stage, if you see, there are two types of or two ways to raise the capital, or you would see the two or three ways to raise the capital for a fund. So one, commitment base. Unit base and ETF, exchange traded base, so which you can list units and raise the fund. Correct? In a standard way, if you segregate all this, ETF and listing units, probably you would see in mutual fund. Yes, no, maybe.
Yes, yes.
Unit base, mutual fund and hedge fund, they raise the fund again through unit, different units. You can create units, issue to the investors, and they raise it. Then private equities raise the fund through commitment. That's how you can differentiate the three funds. If you see any question as such in your interview or while processing as well, you would see that. In a private equity, you required commitment letter, term sheet or agreement to record that investor name or transaction or value of transaction in the accounting system. In a hedge fund also, you require document to check it, management fees, incentive fees, crystallization, the class value. Otherwise, you cannot record it. And in a listing, mutual funds or ETFs, here also you would see the buyers. Buyers, it means who can, or buyers or sellers of unit holders. They can directly sell it like equity or bonds the way we buy it. The similar way they buy it from the stock exchange, or maybe through asset management companies directly, or maybe brokers or transfer agents, especially, I would say. They can buy, means investor can buy the units or sell the units, and that's what your transfer agents come into picture. It's like a stock exchange. Transfer agents help you to get the buyer and seller for mutual funds or hedge funds units.
Can you give me the example for the listed fund?
ETFs, exchange traded funds, go and check
Okay.
on a stock exchange. SBI ETF,
So
Axis
which is similar to like that the way we are doing trading.
which is similar.
Okay. Whereas in the second one, the unit base, we are just
Yes,
subscribing the
through
mutual fund.
subscribe, through subscription and redemption, you will have to subscribe it.
Okay. Okay.
That's what I wanted to subscribe. Here also required subscription. Request will received as a subscription, so it means to the pool account fund will received as a subscription. Then What about, let's say, what about redemption? Here again, request will receive as a redemption, but in a ETF, it will like buy and sell normally. Buy and sell. Investor will sell the unit, investor will buy the units. It's normal buy and sell. This is also normal buy and sell. There is no difference in it. Redemption means sell of unit. Subscription means buy of unit.
Yeah, I have one question.
Yeah, go ahead.
Whenever there is a subscription or redemptions, for example, the ETF fund, if there is a seller, of course there will be a buyer also. So if there is a buyer, there will be a seller. So
Yes.
that won't affect that
NAV.
on the pool level, on the aggregate level of the fund. But whereas in the unit basis, if there is a redemption, then there will be a
Subscription as well. That's what transfer agents play the same role like that is stock exchanges perform to list the units and all.
Okay. So that doesn't affect the pool account.
Yeah. If it is a new redemption or if it is a new subscription, in that case, but yeah, eventually there is no impact due to subscription and redemption.
Yeah.
We'll discuss that. We'll discuss everything. We'll postmortem this subscription redemption part.
Yeah.
Then here at a private equity level, we don't see the subscription and redemption. Okay, then we see it as a call and distribution. Call means subscription again, and distribution means redemption. But this distribution work in a different way. It required a lot of calculations to process the distribution. And for a call, it is easy, like subscription. You can draft in one letter with bank details and all, send it to the investor stating that, dear investor, this is the due date for XYZ payment. You had committed to us to process the payment on or before this date to us for an investment, and this is the due date which we found new business. If we process the payment to us before this date, then we'll pay you the committed return, let's say 8%, 9%, whatever it is, and we'll invest in the XYZ securities or maybe company. That's how you can draft an email to the investor, and then investor will process the payment to you. And once you receive the payment or to the pool account, then again you need to process that payment to the investee company. That's how your call or subscription theme work in a commitment based funds or private equity funds. Okay. And distribution, which is something when you received commitment or investment proceed from the investee company. Let's say Zomato, you had invested in Zomato and now Zomato listed through IPO. When the company is listed through IPO, most of the private equity funds, they receive their investment value. Because after listing, hedge funds, mutual funds, HNI investors, retail investors, they will enter in the fund. And private equity houses, venture capital, right? Then any angel investor, if it is there, they'll look for exit. That's the difference. So it means, in short, private equity funds, they will sell the investment to the hedge funds and mutual funds, or maybe the banks or institutions or investment banks who are interested to invest in that XYZ company, and P or VC or private equity capital funds or maybe venture capital funds, they can take the exit from the company. And once they take the exit, so they received distribution. So they received profit. Profit, it means investment value. So that investment value, you need to calculate it. Calculation part we'll discuss separately. But in a normal way, in a hedge fund or mutual fund, when you received, what we check? Net asset value. Means total asset value, we just check it and deduct all the liabilities or provisional expenses, or we also or make a provision for that is threshold limit, maybe 5%, 10%, 20% of that net asset value, and then after net profit which we process to the investor. That's the easy one or easy process. And your job is done. But in a private equity, you need to calculate few more things to process the net asset value or capital value to the investor back. So in short, redemption, it is a part of a return of fund to the investors, and subscription, it is a part of to accept the funds from the investor for an investing purpose. Right? So now any doubt in terms of, let's say, what is this, because this is all the parts or types of to raising fund process, right? So any doubt guys you have in it? We have just raised the funds, okay? We have just raised the funds, and we have just discussed about the different types how you can raise the fund. It's like a normal business. As I said, we are also looking for a fund. So, or very soon, maybe you would see the official notification from GMT side that GMT gonna raise the funds from the investors. In the similar way, fund also announce the same notification, and they raise the funds for an investment purpose, and that's what we call asset management company. So they're gonna manage the asset. Asset, it means cash. Cash, it is a part of asset. Then we're gonna manage it. Okay. Dinesh, any doubt? Suresh? Yes, no,
Yes, sir.
maybe.
No, sir. We are able to understand.
Okay, great. Because there's all things are new for you. That's what.
Yeah.
I'll take you a little ahead. If you see the silo or if you see the flow, investors from a fund accounting side till the subscription part, right? Cash, investors, they are transferring to whom? To the fund pool account. Pool account, basically it's a bank account. If you see from a fund accounting side, investors, they are processing cash to the funds, right? So accounting should be done at investor level, right? Yes, no, maybe. Investor allocation. Accounting should be done at investor level, correct? Let's say pool creates several classes. Class A, Class B, Class C, Class D. Here is this. This is, let's say, GMT fund. Under GMT fund, you're seeing different classes A, B, C, D. Why we create classes? That would be again another question. Anyone would like to take a lead and explore it on this? Why we create classes?
Maybe they may be investing in different asset classes,
Here, that can be the one reason.
or there may be a different strategy for each class.
Yes, it can be.
Fund traded for frequently or short term, long term.
Correct. Can be tax purpose as well.
Yeah, tax purpose.
Right? Because see, why we define or develop the or create the classes? The reason is to manage it, it will be very efficient to manage that particular class. Whenever investor takes entry in the fund, we create one class and we separately record it throughout the 1 year, and at the end of the year we can plan it out in a different way, so we can merge all the classes in one master class and we can reallocate the NAVs to the again investors account. Okay, so that is like latter part anyways. So now say under class A, let's say B person invested, which is 50, and like B there are 10 more people. In B, let's say Z, they want to invest like 100 rupees or 100 crore, or any of the class is 100 maybe, or maybe 50, that's depends. And there are again like Z, there are 10 people. Here let's say E want to invest 150, and there are again like E 10 people, and with class D there is one investor F who is ready to invest 500, let's say crore, and there is only one investor. There are no any other investors. See, at a fund level, or maybe from accounting point of view, we'll have to prepare the accounting for separate class, and we also set up the same accounts in accounting system as well. So we create it, we fill all the data in system, and to create the separate sub fund under the main fund, there should be a GMT fund. Because the cash from investor received on pool account, but under that pool account there are sub pools as well that needs to be created in system for an accounting purpose. Otherwise, how will you record it? How will you manage the fund? How will you manage the buy and sell activities? How will you manage the actions, corporate actions, different things, income processing part, valuations? Would be a difficult one. And on and above, to calculate the incentive fees and pay to the fund, that is fund managers, that would be again would be little tricky or complex one. But this class or different class themes which actually helps fund accountants to calculate the fees for per class, to charge it, to allocate it, record it, and then close this activity. That's what. So it means sometime investors subscribe the let's say B investor subscribe the units under class A, because this class A gonna invest in equity, maybe this gonna invest in bonds, this in maybe let's say mixed instrument equity plus bonds, and maybe this one would be derivatives or cryptos, or it can be anything. That is depends on the risk capacity, taxation, that taxation or exemption, if they are taxable or not, or exempted or not, everything means after that they can discuss with the fund managers, and accordingly the fund the investors can send the fund to the GMT academy or GMT fund or fund management house, right? But see, from
So,
a accounting point of view, so investors, they are sending their cash, so it means accounting is required at investor level as well. And that's the reason we prepare partner's statement. Partner's statement. And we record partner's name, class A, B, or other 10 invested, each 50. Their book value, their market value, or maybe their current market value or fair value of a portfolio. So it means it's mandate to allocate the investors' units to the investor's account after subscription confirmed. That's the regulatory requirement. Correct? See the sequence. And now fund received, that GMT fund pool received fund, but fund received under different classes. So it means fund should be allocated to each class. Again, this is also regulatory requirement. If investor send the funds to you for class A, so it means that fund should be allocated under class A. That fund should be sent to the class B. That fund should be sent to the class C, because for every class you would see the different management fee structure. Maybe that here you would see the 2% management fees, or here maybe you would see only 1.2%. Here with, let's say here, who is paying 500 crore, maybe he can only pay 1.2% on total capital. That's the reason classes are very important. You would see the different terms with a different class. Yeah, go
Yes,
ahead.
Suraj, I have one doubt. See, classes are designed based on the investors or asset classes.
Asset classes as well as investors' contribution as well. There is nothing like fixed which can guarantee it, only that we can define the classes as per on the basis of investment requirement, or maybe on the basis of instrument and all. No. And that's what we said, like, you should always go through the investment prospectus. And that's the reason if you invest in, see, for a mutual fund, everything is available. Just go and check the MP site. They have disclosed everything.
Yeah,
Let's
there
say
is a scheme.
balance fund. Balance fund, it means they are going to invest in bonds, debentures,
There will be a
debt and
SIC
equity.
document. We can refer to them.
Exactly. Only the document which define, or that all the information which will be there on the document, you need to refer the document.
So basically, exactly the reason what we can say the definition kind of thing for the classes, to create the classes.
Classes with defined or create on the basis of investors' contribution received and as per the investment objectives of an investor. And from accounting side, operation side, again, because see, from an operation side, if you see, every quarter you received some fund, right? Or maybe invest subscription request or redemption request. That would be very difficult if you collect all the funds in one and manage the subscription and redemption part. And that's what also from an operational excellency point of view, fund can create separate classes and manage the so allocate the investors to that particular class, and whenever they received subscription redemptions, they send the request to that particular team to please record. Means instead creating or having impact on all the investment, only impact will be there on this class only, and would be easy to trace it, would be easy to record it, would be easy to calculate the fees and all. Everything would be easy for fund accountant to manage this class system. let's say B, you have received subscription request from B investor. Another subscription request that you know now say investor again want to subscribe the units under class A. You can record it. You have received subscription request. Record it.
Yeah, okay.
That is depends. But yeah, investment prospectus that disclose everything. And that's the reason front office team means selling teams, right? They signed the documentation and all, and they send it to the market data team. So where they actually feed the data into the system. And that's the reason fund accountants, they don't require to check that front office or agreements or any stuff. They just need to process the transaction in the system. Because fund accounting basically it means to record the transaction in the system. On the basis of that, publish your trial, and your accounting is done on a daily basis. What we are doing then? You don't check this prospectus and all. Do we check it?
No. I heard that, but we don't.
Exactly. And that's what most of the people that are lacking, where that they don't know. They are working as a fund accountant, but still they don't know what is happening. They don't know anything. They are recording the transaction in the system day in, day out, log in on time, log out on time, and in between just record the transaction, prepare the trial, and send it. Yeah, my job is done. And if I see any issues come across, then spend some time to do investigate or take some help from the other colleagues, then manage it. But beyond that, this all stuff is important, right? There are few institutions who manage all this document repository, and that's what when you join they allocate the stuff to go through all this, right, where we save all the documentation and all, because you should know it, how it is works, and then after you can apply the accounting treatment. And important is fund accounting is required at class level. Fund accounting is required at pool level. Fund accounting is required at investor level. So it means, in short, to allocate the class or units to the investor's account against the cash received. That's what we called investor allocation. Yes, Chandra, am I right?
Yeah, sure. Yes.
You're working as an accountant. That's what I'm. Okay. Yeah. See, again, when we received subscription, let's say cash, who send it? Investor to the pool account, right? And if we record that transaction in the pool, see guys, it's important to record the investor name in the books of fund. Okay. Investor allocation, it means to record that investor name in the books of fund, and also record the contribution investor sent to the fund. Let's say 5,000 cash that investor sent to the pool account, so that 5,000 should be recorded here. But how will you record it? That's the important or interesting question. Let's say this is a GMT book, GMT pool account. You got to know that you have received a notification that 5,000 rupees or maybe dollar has been credited in the GMT pool account. So it means in a bank account. In a reality, fund accounting team, they just received the notification. They don't get the access of real bank account. That's what we have a strict system, or maybe any other source that we refer. The similar, like at the end of the month we received salary, and along with that we received message as well, your salary has been credited. Correct?
Yes.
Same way, we received notification, and that notification we called wire instruction, or maybe instruction, swift message, or maybe any other source. If you have, we can refer the confirmation from the source as well. You can take a snip, prepare one Excel set or checklist, or follow the checklist of a fund and paste it there, and follow the other checks that you have received cash 5,000 from investors. It means definitely there would be investor name, let's say A. For class B, so it means under class B you need to allocate the investor's name and also need to record 5,000 under class A. Then here what would be the accounting entry, or how we can apply the accounting treatment when you received fund? Now we know that there are two accounts. One, cash that fund received, and another one is the who sent the fund. Investor sent the fund to the pool, correct? So it means there are two accounts. One is personal accounts and another one is real account, because cash is the part of real account. How we will record it? Any idea? Because here would be two accounts, personal
And the real account. So the cash is coming in, so cash account debit and the credit the investor account.
Credit the
Investor's name account.
why?
Because if the investor is giving cash and the cash we are
It is a
receiving.
part of personal account.
Yeah.
Personal account, it means debit the receiver and credit the giver.
Yes, correct.
This is the basic one, but worked at advanced level as well. You should know that how you can apply it. It seems very basic, but this worked at advanced level also. Debit what comes in, credit what goes out, debit the receiver, credit the giver, debit the expenses and losses, credit the income and gains. First and for most important is initial recognition. If you don't know how to recognize the transaction, then you are not fit for accounting. Let's say dividend received. You should know it. Dividend, it means it's income, and we have received on an investment or invested value. And if it is an income, then categorize it. If you have received, so it means you have received cash. Cash, it is a part of real account, will be debited. Dividend, it is a part of income, will be credited. Subscription request, you have received as a cash, but that is you have received as a capital. For a business, it received as a capital. Business received cash but received as a capital. Why? See, business has no cash at this point in time, and that's what business is raising capital from the investor. And another important is why we cannot record this 5,000 in the books of Samir's account or anyone's account who is sponsoring to this fund, because of business entity concept. A regulator will not allow you to record that in the individual person's account, just because of business entity concept. Business has a separate existence from its own director, CEO, fund manager, or investor. It should be recorded in the books of fund only, and that's what we record it. Any doubt so far? Any question as such? Are you enjoying or not?
Yes.
Suresh, Praveen,
Yes, I'm enjoying, but still have many questions. But I will do homework and I will ask.
yes, 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 you can, you can. So let's say now I want to record this subscription portion in the books of fund. So what would be my accounting entry? Any guess, guys? If I take the example, let's say GMT fund has received 5,000 as a subscription from A. This is the data you have received as a fund accountant when you opened or when you logged in your desk. You received this request to you.
Subscription account debited to cash or bank account debited, sir.
No,
Sorry, sorry, sorry. Can you repeat?
cash account debit
Hmm?
because we are receiving the cash
Hmm?
and credit. To GMT fund account.
No, you cannot record that.
Then
GMT fund
Subscription
accounting, see,
receivable.
there is a rule. There is a rule. If you are preparing the accounting for yourself, so you cannot record your name in the books of account.
okay. Then subscription
It's a rule.
account or capital
Sorry.
account.
Subscription receivable to the cash account.
So it means in the books of GMT, we can record it by cash and bank account debit
Yeah. 5,000.
to.
Subscription account. Oh, share capital.
This one is a simple entry, but you would see the change in it. Why there will be change in it? This is the one way to record it. So it means it's a plain entry. When you got to know there is a subscription confirmed, so it means cash you're gonna be received, and that you can definitely transfer it to the share capital account, because this one, why this is debited, it is a part of real account, and why this is credited, because it's a liability again, and this one we call again personal account as well. Debit the receiver, credit the giver. Personal account, that's what this will be credited. And where you can record it, balance it. To the liability side as a capital. Investor name, let's say A sent to you, A. Let's say 5,000, it means you created the NAV, let's say 1,000 for per unit. So in 5,000, the investor can subscribe 5 units, 5 into 10. So 1,000 into, okay, 1,000 into 5 would be 5,000. So liability would be 5,000. And this should be in the books of GMT, not in the books of investor. Because this liability will be as an asset in the books of investor. Because investor will record it investment in GMT fund. Investor will treat as a will treat as an asset. Vice versa. So it means we raise the capital. Now GMT has its own capital. See guys, we discuss about cash. Cash, it means cash received from investor. Accounting is required at investor level. So it means this units, 5 units for per 1000. So this projection needs to be recorded in the books of investor also. But now after raise the fund or receive the fund to the GMT, if you see the subclass, you can create it, but now we are assuming that there is no subclass, nothing as such. We're gonna directly invest it. How we can invest? Any idea? Now you have a 5,000 fund. Everything is linked. Cash is linked with investor. Investor is linked with subscription. Subscription is linked with GMT. And now GMT is gonna invest. To invest raised capital. To raise invested capital. But if you observed, the same portion as a cash, that is the GMT raised, GMT also recorded at asset side as well. Why? Because for GMT or in a transaction, if you see, GMT received cash but received as a capital. Capital, it's a liability, so you can record it here. But now GMT has 5,000 rupees as a cash as well in the GMT book, and that's what we recorded to the asset side. So it means if you have 5,000 rupees for an investment, to invest raised capital. So raise it, to invest it. Let's say in a mutual fund, we invest in equity, right? Bonds, maybe money market instruments, maybe derivatives, little bit. There is a rule. If you have 5,000 in the mutual fund account, then mutual fund can only 10% of 5,000 would be 500. You can invest max to max this amount in one company. This is the regulatory requirement. Less than that you can invest, that's fine. For a minimum investment there is no bar, but for a maximum investment there is a bar. Because total asset is this. Total asset is 5,000. Total net asset of this GMT fund is 5,000. So you can invest only 10% of 5,000 in one company at a time. More than that you cannot. Regulator will not allow. And still, if you want, then you will have to provide in detailed discussion about this particular investment. Why did you invest? What was the previous threshold? And what was the exceed amount? That you need to provide each and every details to the regulator. That's the requirement. No one will ask in this in an interview, but still this is for like good to know basis. Sometime if you are guys tenured one, then you may expect question. Then what about hedge fund? Let's say hedge fund has again 5,000. Let's assume it. Then hedge fund can also invest in equity, bonds, APS, MBS, money market instrument. If they're paying high yield, only they can invest, and derivatives. Nowadays hedge funds, they're investing in crypto assets as well. Means since 2014 they are investing into this asset. And distressed assets. So one of the example for distressed asset is Junk bonds. Junk, it means risky bonds. And here, if they are investing in distressed assets, they create side pocket. So what is side pocket? One hedge fund, you would see two NAVs. Let's say if the hedge fund is investing 4,000 in this instrument and fund is investing 1,000 in distressed assets. So one fund will have two NAVs. You will have to prepare it separately. You will have to register the hedge fund as a side pocket investment. You can invest and you can maintain separate accounting or maybe NAV, need asset value, for a side pocket investment. And total would be your 1,000 plus 1,000 would be 5,000. And that's how you can maintain it. If you see the private equity investment pattern or theme, they invest in preference equity, they invest in bonds, they invest in loans, they invest in loan obligations, but they only target the private limited companies. That's the important one. So can private equities invest into public limited companies? Yes, they invest. But how, sir? They invest through ABS, MBS, asset backend securities, and mortgage backend securities. There is news in market, recent news or latest news about Carley Group. Carley Group purchased the 8,000 crore worth of rupees loans from Yes Bank, and that's what Yes Bank received liquidity. So now Yes Bank in a better position, and you can check the Yes Bank fundamentals as well, or in the stock movement. There is a very high volatility in Yes Bank stocks because Yes Bank sold entire bad loans to the Carley Group, and now Carley Group will take care of it. But how the public limited companies sold their loans to the Carley Group? Through ABS, through MBS. I'll take one example, not in this session, but in different session or maybe product session and all. Definitely we're going to cover the little bit about this instruments and all with an examples. Now see the structure. Private equity, they have also 5,000 crore. They will invest through preferences. They will invest through bonds. They will invest through loans. They will invest through the other financial instruments. Hedge funds, they will invest through equity, bonds, EBS, money market, derivatives, cryptos, distressed assets. Mutual funds, again, they will list or maybe they will invest through equity, bonds, money market instruments, or little bit derivative market as well. Okay, why this is important, guys? To work in a fund accounting team is not a challenging one, but most of the people, they don't have a product knowledge in details. And there are people like they are strong at product knowledge, but they don't know how to apply the accounting treatment to the product knowledge in a practical way. That is like another challenge. There are people who have joined as a fund accounting team, but they're not even aware about fund accounting knowledge, as well as they are not aware about product knowledge. And action, which is something again different. See, link it. You are investing, so you have raised fund and you are investing in different financial instruments. So then it means you would expect action. Action on what? Action on investment. So that action we called corporate action. If you invest in equity, you may expect dividend, you may expect DREAP, dividend reinvestment plan, cash and stock option, maybe merger, acquisition, stock split, reverse split. You would see a number of different activities.
spin-off.
Spin off, yeah, different actions. Different actions like income based action or benefit based action, right? Internal restructure. Maybe in stock movement only. Default actions. You should know that, because several time people they raise question to me, sir, due to corporate action, is there impact on net asset value or not? You should know that. Income, it means you're getting additional cash payment. If you received additional cash payment, there will be different treatment. Fund will decide whether fund want to reinvest or fund want to distribute that dividend as a shareholders or unit holders. Fund can do that as well. That we should know. That's the important one. What are the income based events? Requirement is you should know the products in details. Equity, offer dividend. You should know about equity as well as dividend as well. Preference equity, again it is a part of same income action. Offer dividend, fixed dividend, and then qualifying parameters for this action. Qualifying rule is X date, record date. We'll see that in corporate action session. Then you would see if you are investing in loans, bonds, government securities, or money market instrument, then all instruments are like interest bearing instruments. Then you would see the interest bearing corporate action on such instruments. Sometime you would see the movement base split, reverse split, or worthless redemption. Company is not going to pay anything to you, just company want to debit the securities. Sometime you would see the default actions as well, so that the counterparty is not going to pay anything to you. You are recording the accrued interest payment in the books of account, but after 1 year you received mail from the counterparty, or maybe that the institutions, they are not going to pay the interest payment to you because they have declared as a default or maybe a bankrupt. Then you would say the liquidation activity, default activity, redemption, right? Experienced one guys responded yes, no, maybe.
Yeah. Yes.
And requirement here is you should know all these activities in details. If you don't know, see, you raise the fund, investor send the fund received it, fund accounted as a subscription or as asset as well. Now that cash invested into different instrument here, invested, and after investment you would see some action on your portfolio or investment. So you should know that how you can apply the accounting treatment when you see the action or movement in your particular stock. Okay. Another point. You raise capital. You open bank account. You open demat account by the name of fund. You appointed one prime broker, transfer agents, maybe stock exchange, if it is listed one. and you're managing that activity by appointing 100 people to manage that activities, don't you think so it is required fees as well, so that you gonna charge the fees to the different investors, because that 5000 is belong to or from the investors who have sent the fees or that cash, initial cash, who sent it? Investor, right? Who invested? Fund manager. Then fund manager will not offer any service in free of cost, and that's what your expenses come into picture. Different fees come into picture. Nobody will offer the demat account in free of cost. Custodial service, nobody offer the custodial service in free of cost. Management fees, investment manager expenses or fees, nobody will offer the service, management service in free of cost. Then who will bear this, all the fees and expenditures? We'll discuss that in feed session, because there are levels, organizational level. Then partnership level. Then fund level. Because we record expenses at organizational level, we record the expenses at partnership level, because under one partnership you can see different funds, A, B, C, or class. And we also record the expenses at fund level. Most of the accountants, they are working at fund level. We just book the expenses, maybe income or everything at a fund level only. And this expenses part, it also comes under investor allocation. To calculate the fees, to calculate the expenses, cost, everything, including loss, and allocate to the investor's account. Okay. Any question, guys? Yes, no, maybe.
Not it, sir.
Not.
No, no.
No.
Okay. Then there are, means investors, they are charging fees as well, right? See, this is not a detailed one, okay? Because fund accounting, this is like overview of funds, so which you can link it all the activities, right? When we start the discussion to the corporate action, you can relate this. Means if I directly jump on corporate action, then you cannot relate that portion with the corporate action. If I directly jump on income part, and if we discuss the fund account that entries, then you cannot relate anything. But now you can relate it. You know that we raise the fund by the name of or from the investors. We have recorded under investor account as well. And if you are investing it, then we also expect the actions. It could be good or bad actions that we need to validate, record in the books of account as well. You can relate in this way. And nobody offers the service in free of cost. That's what fees come into picture. And if you achieved the target in a sales team, that we know, if you achieve the target, what happened? Two. Just a minute. If you have a conceptual clarity, then you will not face much problems in fund accounting, whether you are a part of fund accounting or not. See, every fund admin, they have their different applications. Every fund admin. So we cannot learn every application, but if you know the conceptual clarity, what is happening with the particular transaction or how we can apply the accounting treatment and all, then it would be easy to anyone to work with the fund accounting part. What happened? No. Okay. Then on a daily basis, see, when you invest, what is this? What the fuck? Okay, so when you invest, so that investment is linked with market, correct? That investment is linked with market. And when we say linked, it means if you see change in market price, that change you need to record it. So it means at the time of investment value was 5,000, but at this point in time the value is something different, let's say 7,200, because your investment is linked with market. So point here is you have already recorded this value 5,000 in the books of account. What about this extra value, incremental value? How will you record it? Any idea? See the step-by-step procedure, guys. We raise fund, we invest it, then we also discuss a little bit about the actions as well. That actions we're gonna discuss in details. Every portion will be discussed in details, but this is the overview of your fund accounting business. So you can relate each and everything, every dot which you can relate with the fund accounting structure. Then most of the people, they would face the problems with this part, so still they won't be able to record it this because they don't know. See, first of all, in first case, they are not aware about accounting. If you want to become a pro in a fund accounting, then mandate requirement is you should know the basics of accounting. Another one is product knowledge. Without that, you cannot achieve the growth, or maybe you cannot scale your career in fund accounting. It's a mandate requirement. You don't need to learn any application. Within a 15 days, you can learn it, because every institutions, they have their basic setup, so we can offer the application based trainings. The guy who can walk you through out that the screen of that application and all, and after that you're up and running the process, so you can record a transaction. But the requirement is product knowledge and accounting and actions as well, corporate actions.
Sir, 2200 will form part of the P&L. It won't change the cash, but it will increase the NAV. Not
This
sure on the
incremental value, right?
yeah.
Yeah.
2200, yes.
Yes. And here you would see again different treatment.
It is an unrealized gain, right?
Yes.
Yes.
And that's what pricing team come into picture. If you don't calculate the market price of securities, and if you don't update it, then that market value, so it means fair value or market value, book value that we recorded, we have a book value, or we can call it acquisition value, right? In short, purchase value. We have purchase value which is 5,000, but to update fair value or market value of a securities, we have a pricing team or valuation team. They record it. After they record, then you would see the difference in your application as well. You can check it, the difference which you can treat as unrealized gain. And this unrealized gain, you required accounting treatment because already you have recorded this portion. You don't need to do the accounting for this portion. If you record this, then your accounting will be incorrect. Total sum would be around 12,200. That's not the correct procedure. What you required, you should know how you can apply the accounting treatment to the difference. Am I right, guys, who are working in fund accounting?
Yes.
Yes.
And here people stuck. On and above that, see, there are only two ways. Whether you can record it to the P&L or else you can record it to the balance sheet. There are only two ways to record it. But we don't know in which condition we can record it under balance sheet and in which condition we can record it under P&L. If you record it P&L, eventually indirectly that will transfer to the balance sheet. This is the indirect way, and another way is like directly record it to the balance sheet. Most of the people, they stuck here. We have already recorded this value, then we don't need to record this value again. Why will record it? We cannot record this value as well, total value. We can apply the accounting treatment to this difference. It will be like unrealized gain and loss. See this. Now you would get to know the importance of pricing team. There are different things that the pricing teams they verified, and we're gonna see that as well. So we have a standardized syllabus for a trade processing, for corporate action, for income processing, right? For pricing, for cap and stock activities and all. In every session we're gonna cover one topic, but in this topic we're gonna cover each and every aspect will touch to it, so that will help you to link each and everything. Okay, so accounting, it means this, and in sessions we're going to separately discuss the topic, and there are challenges in accounting treatment and accounting entries.
So how you post the journal entry for this difference? I mean, and
hold. I'm not going to discuss this accounting entries in this session, right? We have it when we discuss the unrealized portion, then we'll prepare the accounting entries, everything. I have prepared it everything for you, so don't worry about accounting entries.
Yeah, okay, thanks.
I have a fund accounting checklist, accounting entry checklist. Don't worry about accounting entries. But see, the put a logic, so it means you accounting required for this unrealized gain or loss. If it is a
Yeah,
negative,
yes, I'm just trying to put a logic to identify the
if you
unrealized.
want to put a logic, then we can prepare it. Unrealized gain,
Yeah, it's a nominal amount of.
gain. It is a part of nominal account.
Okay.
And again, what's the rule? Debit,
Debit the expense and in credit the income.
credit,
Income on gain.
income and gain.
Yeah.
This will be credited,
Yeah.
and debited would be asset name.
Okay. Okay.
Simple. And if you see the loss, then this will be
Then
debited,
debited and
asset
credit
name
would
would be
be.
credited.
Yeah. Okay.
So it's very simple. I'm here to simplify the terms.
Yeah. I'm just trying to identify to apply the golden principle rules of this transaction. That's all.
Those are basic ones, but you can apply it at advanced level as well if you know that in details.
Yeah.
What you required, you should know how you can initially recognize the transaction. Is it expense or income? Is it asset or liabilities? Is it any individual person they have sent it to you, or what else? In that way, if you know all these things, then you can record the transactions in this debit and credit manner. Then you will not face any difficulties. And how you can practice the accounting entries? See, I'm not gonna asking you to refer any books, or if you can, then refer the 12th standard, 11th standard, or maybe C or CFS books also you can refer it. That's fine. But still, if you don't have time to read and all, then your daily expenses or income, daily, I'm saying, daily expense, income, daily expense income, you can record it in accounting manner. Everyone have their smartphones. You can see your note app, so you can note it down all your expenses and record it. When you pay the expenses for a meal or maybe milk, then expense account, debit, let's say 10 rupees to cash and bank. So you can prepare it accounting entries in this way. It takes only 5 minutes on a daily basis. If you follow this practice and record it within a 2 to 3 months of time span, you will become a pro on accounting entries. You don't need to do something different. I follow the same practice. I don't have any books with me now, even though I don't have any material. Almost from 4 p.m. So I'm continuously talking about all these terms. But I'm not referring any books and all. I don't have any books with me. But still, if you see, every point that I'm discussing with link to each other, and I'm helping you to link that to the next point. How it is happening? Just because of practice, daily practice. If you know how to recognize a transaction, then you will not face any difficulties, guys. Trust me, you will not face any difficulties. To work in fund accounting, why it is challenging? Because your basic concepts are not clear, or you don't have a basic understanding about the basic things, and there you miss to put your logic then. Okay, anyways, we'll complete this. Now see, now we'll collate everything at one place, okay, or in one plate, I would say, and then see how your fund looks like GMT. balance it as on date. Liability side, asset side. When GMT raised fund as a capital, raised from whom? From A, right? What was the amount? Come on, guys. This is
5,000.
5,000.
5,000.
Then also we record at asset side as well. Same thing, right?
Yes. Cash.
As a cash. At this level, if I calculate the NAV, what would be the NAV? Whether you want to split in units, you can do that. That is depends on the fund. How many units that fund want to create, fund can. What would be the formula to that split the units? 5,000 divided by 5,000 if you can do. So you will have a 1 unit at place. Total assets, total liabilities, total liabilities or initial liabilities, I would say 5,000 5,000. 1 rupees would be the unit price, initial unit price. Okay, then what about total units? 5,000. How to create it, that is depends on you. If you want to create less units, just increase this per unit 10, reduce the unit numbers. So total units, let's say 500, per unit value is 10. So that is depends on you. How many units or how much units that you want to create for a particular fund, you can create it. So we are assuming that initially we had created 5,000 units into 1 rupees for per units that fund raise capital through this process, and that's what fund raised 5,000 from a investor, right? And we booked it as a subscription as well, this request. But later on, after 1 month, see, fund manager already discussed with you that they're gonna charge 2% as a management fees on AUM, asset under management, and this fees will be charged on monthly basis. Monthly, it means not 2% monthly basis. Total fees will be for this 2% will be for 1 year, right? 1 year, but fees will be calculated on a monthly basis and will be applied or charged to the funds or allocate to the funds. That was the procedure, or that a standard operating procedure in place. After 1 month, you are saying the change. Okay, let's say after that, initially means when you raised. Hey, what happened? Hello? You disconnected or all? Okay, you only disconnected. Let me check. Hello, are you there? All? I think all disconnected. Sometime that happened due to timing issues, maybe. Okay, everyone is there.
Everyone is good.
Okay. Shit. What happened? reshare it and we'll wrap up the session. Okay. Thank you for this. Okay, so let's say you invested in XYZ security. If I take the example of Wipro, let's say you invested in Wipro. So value of investment.
Sir, you're on mute.
I'm on mute. Hello, can you hear me now?
Yeah, it's audible. Yeah, right.
Okay, so fund invested in, let's say, Wipro security. So it means when you invest, cash will be reduced here, right? From here. Let's say 4,000 that fund invested in equity. So here total cash should be 1,000 because every fund they maintain their liquid cash positions as well. This was the initial structure, guys. This was the initial structure. But after 1 month at the time of calculation of NAV, or maybe at the time of calculation of measurement of expenses or assets or liabilities, then you got to know this value has been changed. 4,000 was the invested value and now there is a change. So this value seems like 6,000. There is a change in value. How will you record this change? There are two ways. One,
Profit on investment.
yes, you can record it here. You can update the market value of investment and also you can allocate that unrealized
Gain and loss.
gain. So it means you can add it here. This is called your allocation process. So it means you can allocate unrealized gain and loss on investment, right? So total liability 7,000 and here also total liabilities would be 7,000.
Right.
But so what about, sir, if I charge, if the fund manager charge fees, then if the custodian fees charge, then admin fees charge, then what will happen? Now you can link it. This will be like assignment for you, right? We have concluded this initial structure. When you received fund, you can create the initial transaction and then your investment will start and then you would see it because that investment is linked with market. If the price changes in market, then you would see the change in balance sheet of a fund, right? And that is your job to trace that change and record it. Sometime you would see the action, let's say reverse split announce. You can link in that way. Initial investment was 4,000. Current market means at the time of purchase, let's say you paid 400 for per equity. So it means total shares that you are holding, which is 10 from Wipro, right? Now Wipro want to split this 10 shares, let's say 1:10. So means you're gonna receive additional 90 shares. It's not additional, but this 10 shares will be changed and total shares will be 100. But still market value of shares should be around 4,000. There wouldn't be any change in it. But your accounting records will be changed. Initially, let's say we had recorded like on asset statement total shares book value 4,000, market value, let's say again 4,000, and security name. Wipro EQ. Here you would see the trade date and settle date as well. So this security has been settled. Same exactly details you can see in your system as well. If you're using any system, you can cross verify with this. But post action, what will happen? See, there is no change in this value. There is no change in this value, but there is change in this units. Post action, you would see the number of units like 100. Book value would be same. Market value would be same. But due to action, if you see the difference, let's say after action, you are seeing the market value is this. So that value, so it means difference. You need to verify, investigate, and record it. That's how you can link all your logics or your understanding about the fund accounting stuff and try to link every dot with this. If you see the fees payable will be recorded here. Dividend payable recorded here. That's how your balance sheet you can increase. If you buy any other assets from this cash, then your cash will be zero. Let's say you have invested in bonds, you can add it bonds. If you receive redemption request and you have, let's say, cash here, and you have received redemption request for 1,000 rupees, so here total balance should be 4,000 and your cash will be zero and units will be redeemed and send it back to the investor. And as there is no impact on balance sheet, the total amount would be 6. Here also total amount would be 6. There is an impact on asset. Your total asset has been depreciated or down, not because of market movement and all. It's just because of internal redemption request. Total asset is impacted, but for a per asset value, you would see the same. There is no impact in it due to subscription and redemption. So while answering to the question, listen it carefully. If they're asking about total asset, definitely there will be asset will be down due to redemption request. You're paying the cash from the if you received any redemption request, you are paying cash from the bank account or maybe cash which you have or fund has in bank account, right? But what about per asset, that is net asset value per unit? There is no change eventually. There are a number of things. Okay, so I'm done with this initial introduction. We have a certain set of procedure. This was like introductory part about fund and all. So we have the procedure in place. Like, can you see my screen? Excel sheet, guys?
Yes, we can
Yeah.
see.
So we're gonna discuss end-to-end things, accounting entries. Okay, chapter wise we have many things to discuss, cover with the scenarios, right? With the real life scenarios as well. There are a number of things to discuss. Apart from that, this structure we have discussed it, right? But again, structure wise we have a number of things like syllabus wise. Let's say asset onboarding, where is that? Client onboarding or asset onboarding, trade processing. So in one session we're gonna cover one topic. So means next session we'll have on client onboarding. This was the first session on the entire structure, or which you can link your dots with the particular fund accounting business, and you can produce the NAV as well. But under fund admin you would see a number of activities or a number of different processes, and that's what you are not able to get the end-to-end exposure of fund accounting anywhere, because every fund admin, they have a different theme to manage this fund accounting stuff. Means for a corporate action they have a different team, for a trade processing they have a different team, for validation of all the things they have a different team, and to produce the NAV like the way on that screen we calculate it. So we have a different things, or different, they will have a different teams, and you cannot expect end-to-end exposure of fund accounting anywhere. Most of the teams, fund accounting teams, they have a 80% data entry work, 20% which is validation. System will record everything, you just match with the screen. Excel data you can match with the screen and your job is done. If everything is matched, then your job is done. System will automatically calculate net asset value as well, because when the reference data team update the price, market price of securities, and different teams when they update their fees and everything, system will automatically calculate net asset value, then your job is not there. Only 20% stuff which you would see, lot of investigation is required, and your job is for 20% stuff, your expertise is required for 20% stuff. When you pay the excess value through redemption, then think about it. When you record expenditures in the books of account incorrectly, think about it. You have received securities, but the cash projection is, let's say fund purchase something, cash should be debited, security should be credited, security credited, but the fund is yet to still debit. How will you rectify it? Think from different aspect, think from challenges perspective. And every financial instrument has a different accounting treatment. Let's say total revenue swap, you cannot record total revenue swap like equity and bond, because there is nothing to recognize initially. Okay, so think from that aspect as well. So I'm done now. 10 minutes, you can raise your questions or doubts, whatever that you have. So I'm done with my discussion. This recording will be available in next 24 hours, so we'll list it. You can prepare your notes as well, do your homework. Namrata, any doubt, any question?
No, Shiva, not yet. I'll just look at it once again and I'll ask.
Okay. So who are working with fund accounting team? So yeah, so I'll ask them. Chandra,
Yes,
hello?
yes.
Are you there?
Yeah.
Okay, did you enjoy session or not?
Yeah. Anyway, it's informative.
Okay. And another one is, I think,
So, Suraj, in next session, when you are saying client onboarding
fund,
session,
will be from,
yeah,
we'll start from the fund onboarding teams.
yeah. So, in that, will be covered fund structure
Security
means there are
setup, fund
different.
setup, structures.
No. Structure means the standalone fund, master feeder,
Yes.
different. Okay, that will be covered, right?
Yeah. It is all about setup, okay? That is parallel funds, standalone funds, right? It is all about setup. Accounting will
Okay.
be remain same. If you don't set up in that way, I'll show you master and feeder in a different way. Don't worry.
Oh,
How it is work and all.
yeah. Thank you.
But you would say the same setup or accounting treatment under any setup. There is no change in it. Most of the
Thanks.
time you would see question will be there like how we record the expenses in master and feeder structure. Let's say 2% is the management fees. How will we record it? Check the percentage. Let's say 1% is the feeder committed to master, then you can record the 1% expenses in master and 1% you can independently record in feeder, right? So it means accounting will be remain same. You can record accruables if the fees is accruables in feeder, as well as you can create the accruables under in accruals in master as well. The what's in structure, why, that will see it. Okay.
Yeah, sure.
I have a query.
Yeah, go ahead.
So we know that the next class is on the next weekend. So because in the app there are a lot of materials are there. So could you suggest me which for time being till next week, which study material we need to refer so
See,
that we
for
can
client
prepare?
or client onboarding stuff, we don't have any material. Okay, this is like basic or initial stage. From a trade processing, we have a modules.
Okay.
So you can refer the modules for a trade processing, income processing, corporate action, right? Then capstock activity, that is interest payment part, bond, fixed income part. You can
Yeah.
refer the modules.
The reason I ask because there are a lot of materials are there, so I'm not sure which should or I take first as a first one.
Maybe I'll create the folders with only that certain PDFs or modules, that will be helpful, and then I'll confirm to you. In course, I'll create the folders. Okay. Only you
Okay.
can refer that.
Yep.
Any other question, guys? Samir? Okay. Let me
No,
see.
nothing, sir. All good.
Okay. Okay. Then, okay, Samir done. Pranay?
Yes, sir. As of now, we are good, sir. Yeah, understood your process.
Okay, who left then? I think Dinesh left. Okay. Anyways, so if you don't have any other questions, then I'll take your leave. Okay. Meanwhile, go through the recordings. I'll save the recordings there in the course, or maybe in the batch, which you can access it. And I'll also provide the name of that PDF as well, so which you can refer for next session. But that client onboarding stuff you cannot see anywhere. Okay.
Yeah.
That only I can discuss with you how we can set up and all.
But okay. Yeah. But one more thing, as I said earlier, still I'm finding very difficult to view the PDF on the mobile screen. So the font, I mean, I need to zoom out to read the PDF statement.
See, PDFs that will discuss in session as well. Okay, so you don't need to worry
Okay.
about PDFs. And about that application, is not belong to me. So I have
Okay.
raised the request if the people can access it from the
Web.
web,
And from the yeah.
right? Because web, which is something that is not in control, where they cannot restrict anything. So it means you can do anything once you are able to access the application on web. That's what they are not allowing it to me even. But I have already raised the concern if the people can access it from web or not. Let's
Yeah.
see. If I received anything, then definitely. Don't worry about PDFs and all. Everything will be discussed here.
Okay. Yeah. Sure. Yeah.
Right? If you're not able to read it, if you don't have a time and all, just pay the attention in the session. That is enough. The rest, you're working professional, so you can link all these concepts or terms or rules and all with your process.
Yeah.
Okay. I'll confirm to you once the recording is ready.